you know, manage your risk. You know, if you know you can make 20% off an asset and you only risking 5%, then do the shit. We buy when it's low and we sell it when it's high. The same way we buy houses, cars, shoes, clothes, and jewelry. Buy low, sell how to do get the 30. I ain't gonna lie, it could get to 30 because if you check it has some things that could keep pulling this guy down. You got Trump tariff, you got market uncertainty, you got lawsuits. Okay, look at this. This is a macro demand area. Why is it a macro demand area? Because buyers are waiting here. Buyers was waiting here in 2013. They was waiting here in 2016. What's up, YouTube? Hey man, today what we gonna do is go over what the name of the fucking YouTube is, Financial Optimism, and I'm about to go over how to make money at highs. Because listen, bro, the billionaires, millionaires net worth been increasing this year like 10%. S&P 500 up 10% right now. A lot of things overextended, but it's still money to be made. Like a lot of assets are overvalued right now, which is true. We can't deny it, but it's also a lot of assets that's undervalued right now, which is true, and we can't deny it. So what we're gonna do is go over the undervalued assets, because that's what we do. We buy when it's low and we sell it when it's high. The same way we buy houses, cars, shoes, clothes, and jewelry. Buy low, sell how to make money at highs. And then also with this channel, bro, I be learning stuff just to help people out. So I probably done read like hella personal growth books. That's why these quotes up here. I done been through some financial hardship. That's why the finance shit up here. And I've been through spiritual warfare. That's why the spiritual shit there. Spiritual, fucking real life, and fucking finances. You want add some more to it. This is important. A lot of shit important. You ain't gotta read it. I gotta read it. That's why I put it there. All right, so the two sectors we're gonna talk about making money in is pharmaceuticals and transportation. I got an X on transportations just because I like them less than transportation, because think about it. Fuck the healthcare industry. But at the same time, if you can make some money from it, hey, money might be the root to all evil. Ooh, hey, it might be. Check this out. Lilly, it's at the 200 EMA, it's undervalued, and it has a gap to fill. Let's go check it out. Oh yeah, one thing I wanted to show y'all is how levels respect and shit. Respect levels. Like I was looking at Hood, I was like, damn. Cause Hood, my biggest stock pulling back today. Look, this is my whole portfolio damn near. Some of this shit ain't on. Some of this shit is off. But LEN up like a motherfucker. Look, this why you gotta buy assets undervalued, cause sooner or later, if it's a good asset, it's gonna go back up. Just like LEN, that shit up a lot. See, me and my lady in this right now. And I guess try to get as much people into it as you can. I ain't gonna lie, this shit is like persuading people. It's like a workout nigga is persuading a big person to eat less and move more. It's like everybody know how to lose weight, but is you gonna eat less and move more? Is you gonna spend less and invest more? All right, but yeah, I'm getting on topic. First thing first, Eli Lilly. Reason why I like them, cause I said it was at the 200 EMA. Let's do some 200 EMA fucking previous I guess reactions to it. Okay, boom, boom. Y'all see what's going on? It's the 200 EMA. Pull this up on your map. Go to TradingView. Do the same thing I'm doing. It's gonna teach you something. If you already know this, then it don't matter. All right, look, we see how it reacts every time at this 200 EMA, right? On the weekly time frame, the higher time frame is better. I enter on the daily time frame, mark it up on the weekly. The higher the time frame, the more information it'll give you, but also the more fucking the safer it'll be, because of the more information it's giving you. It'll be more fake outs on the 1 minute time frame. It'll be less on the 5, it'll be less on the 1 hour, it'll be less on the 1 day, it'll be less on the 1 week, it'll be less on the 1 month, it'll be way fucking less on the 12 month, you feel me? Pick a perfect time frame that you like. I'm just showing y'all what I like. Okay, let's do another thing. It ain't down there yet. That's why I ain't really going crazy yet. But on a weekly time frame, it don't really get to below 30 hours. So I ain't gonna lie, it be getting close. But as you see, once it gets to that 34 level instead of 30, it start taking off. But once it do get to 30, I ain't gonna lie, it could get to 30 because if you check, it has some things that could keep pulling this guy down. You got Trump tariff, you got market uncertainty, you got lawsuits that could continue to pull this shit down, but you also got all this shit that can continually boost it up. Then you got to think about it. The stock market go up 75% of the time. The S&P 500 been doing 10, 15% the past 100 plus years. So it's like the market is going to go up more than it go down. So you got to use that to your advantage as well. But robust financial growth and it beat earnings. I ain't gonna lie, one thing to also do to make sure this is a good investment, listen to their earnings call, see what they got going on. I didn't make enough time to check it out because we all have enough time. But yeah, check that out. I also didn't get into them yet because I'm in UPS and I got other stuff I'm in that I like more than Eli Lilly. When I get into something, it's all about risk to reward. Shit, if I'm risking fucking 5% somewhere, like check this out. I ain't gonna get off topic. Let me move this over here. So I can look at the next slide, cheat a little bit. Okay, then we're gonna look at NVO since it's undervalued and at a macro demand area. I like NVO as well. Let's check this out real quick. Some fundamentals. It's on long IRA. Ain't no way it's on Robinhood. Yeah, Robinhood NVO is going to pop up, reload. Then it's gonna pop up my settings and shit. Okay, perfect. Not Aristotle this time. This one of the best guys to learn from: Aristotle, Chris Sane, and Wall Street Trapper. Yeah, Trap Watch List. Kevin. I started watching Kev. I forgot what his YouTube was. But everything else you're gonna see pop up ASAP. Let's check out this Robinhood playlist. I ain't gonna lie, I used to have beef with this screener. I used to have beef with it because the old screener used to be up under here. Remember, you could use the old screener right here. You can pop that shit up, boom, and use it. I don't learn how to code too. I might start coding this shit. But yeah. But it's over here now, which is better, I ain't gonna lie. But yeah, we looking at NVO. I thought I added NVO to this list, bruh. I did. Where is it at? It's crazy. We're just gonna look it up. Well, we're gonna look at Lilly fucking fundamentals, right? So let's check this out. RSI low. Operating margin is high. Anything above like 15% good. Debt to equity is good. Free cash flow. Like, we gotta figure out what they doing, bruh. Figure out what they doing to have all this extra free cash flow. Return on equity is great. Current ratio is great, you know. The whole health technology sector took a hit because of, you know, the news and market uncertainty that's gonna happen. Is it recovering soon? Hopefully. Let's check out NVO fundamentals real quick. I also let's see if this is on any playlist. Let's just reset, man. NVO, bro, y'all might have to do it yourself, bro. They not trying. I got it on my watch list. I don't know why they tripping. Is it on this watch list? This is my biggest watch list, and it's not on here. I don't know why. I don't know what I did, but obviously they want y'all to check it for yourself. These are all my fundamental notes. I also put NVO on here because I like the fundamentals. But next we're gonna go over UPS. UPS is at a macro demand, undervalued, and has a gap fill on the way. I like them gap fills, but at the same time, I fucked up a lot just from buying on the gap and not waiting for it to form like a support area, you know. Just getting in early and shit, not waiting for confirmation. It's all about levels, and you gotta wait for the level to show you what it's really gonna do before you operate into something, you know. Like I said, higher time frame. Look at me. I'm using the monthly time frame on this chart. That's high. I never thought I would use the monthly time frame when I first started. But yeah, I am. Okay, look at this. This is a macro demand area. Why is it a macro demand area? Because buyers are waiting here. Buyers was waiting here in 2013. They was waiting here in 2016. They was waiting close as hell in goddamn 2018, but they was impatient, goddamn. They was waiting back in 2020, and now we're at this same level. Will buyers step in? Let's start the examine on a smaller time frame. And it looks like buyers are starting to step in. Why? Because it is trending upwards. It's trending upwards, you know. But back to that daily. See, that's the thing. The hourly, it might break out on the hourly, but on the daily, the higher time frame is just more secure for you. Look, it had gap down as well right here, you know. So it has potential to goddamn come back up here and go backward, goddamn, you know. But yeah, let's go with what else we got. I'm not done yet, man. Robust revenue would be more profitable leaving Amazon. Okay, look, robust revenue, boom. They continually, they in 220 different countries, bro. UPS ain't going nowhere. If UPS fall off, the world gonna fall off with shipping production. They in over 220 countries. They robust, they revenue is steady. They'll be more profitable leaving Amazon. That's been a negative thing. Like a lot of people been like, oh, UPS, boo, 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 throw tomatoes because they leaving Amazon. But look, if we check this out, man, they net margins been dropping, and they saying Amazon is their biggest, they shipping hella Amazon packages, but it's not as profitable as the other companies they working with. LEN is up 5% today. Thank you. Path been notifying me today. Thank you. Fucking what else? A lot of shit been notifying me. But damn, yeah. Fucking margins is increasing. So I mean, hey, margins increasing. Hey, you feel me? Focus on long-term growth, like I just said, bro. They in over 220 countries. They still focus on long-term growth. They do got negative shit, high debt, Trump tariffs fucking them up, lost on earnings, declining free cash flow, decreasing margins, but that shit finna turn over, you know. So all this shit, it might be kind of bad, but it's like that shit gonna recover, bro. It's too much demand there, I think. And if it ain't enough demand there, I ain't gonna lie. FI, I'll fucking win it. FI, you got commercial services I'm liking. It's starting to goddamn, you know, starting a little hold, you know. What else we got? Oh, my other favorites are Saya and ASC, but they've been running lately. I'm in ASC now, but like I said, they've been running lately. Why did I get in them? Because they was coming down to this beautiful level right here, and they holding. They came down, they fucking wicked, and they holding. Then Saya, I like Saya as well. I've been playing Saya a couple times. I like Saya a lot. Every time they come down, bro, just buy this line. I ain't gonna lie. Demand gonna be here. Then buying here is even better because it's like, bro, they not gonna fall below 130, bro. So it's like, that's a safe spot. But, you know, manage your risk, you know. If you know you can make 20% off an asset and you only risking 5%, then do the shit. Like, only risking 10% to make fucking 20%. We got more things too that's getting there, like IT. I got a starter position, but I'm waiting. I ain't gonna lie, I want that bitch to come down some more. But as you can see, it's already holding and it beat earnings. I like Snap as well. Let's see what Snap doing. I was listening to their earnings call. Even though they took a little shit on earnings, they still focus on a lot of beneficial things to bring in more revenue. That's the thing, bruh. They bringing in more revenue. They at a fucking macro demand area. I see potential, man. I see potential. We need to see a little more holding going on, which is true. And they got that gap fill too. Gap fill. Leave, I don't give a fuck. Oh my God. Gap fill stocks. And I'm on capitalize. What is a gap fill? Scenario where stock price moved to fill a gap previously created on the chart. How successful are they? Let's see. And this all you gotta do to learn shit, bro. Just Google shit in YouTube. Now look, this gonna tell me something, right? How profitable, bro. It's like 70, 80%, man. Just keep searching, man. You're gonna see, look, gaps in chart fill 80% of the time. You're gonna see it, bro. So when I do see them gaps fill at macro demand areas, it's like a green flag. I see them wicks at support, it's a green flag. But yeah, those are how you can make money fucking with the market being at an all-time high. Just buy shit at an all-time low and then sell it when it gets to an all-time high.